Welcome to compliance training provided by the Washington State Public Disclosure Commission. We hope this information increases your understanding of campaign finance regulations and your confidence with reporting and decreases your accidental reporting errors. This video will provide you with an overview of various regulations, including those pertaining to contributions and expenditures. The Public Disclosure Commission was created by the people in 1972 with the passing of Initiative 276. Disclosure laws are found in the Revised Code of Washington and in the Washington Administrative Code. You can see here on your screen RCW language that summarizes the reasoning behind public disclosure laws. Let's get started with an overview of candidate and committee reporting. If you're a candidate, for reporting purposes, your candidacy begins with the earliest instance of any of these things. You become a candidate when you raise or spend money for your campaign, reserve space or purchase advertising to promote your candidacy, authorize someone else to do one of these things, state publicly that you're seeking office, or file a declaration of candidacy. You become a candidate right when one of these occurs, even if it is years before an election. For example, someone might start raising money for their campaign in 2020 for an election in 2024. If you report for a committee, your committee is officially formed when your organization first has the expectation of receiving contributions or making expenditures in support of or opposition to any candidate or ballot proposition. There are many types of committees. Among others, there are groups supporting state or local initiatives, there are school bond or levy committees, and there are political action committees. When two or more people pool their funds to make expenditures to support or oppose a candidate or ballot measure, they are considered a political committee. Candidates and committees have various reports to file. You'll hear a few referenced in this video, and this chart is an overview of some of them. We'll cover the F1 shortly. There are several different C reports, and this video will address a few of them. Reports covered in this video must now be filed electronically. They can't be faxed or emailed. For some of the major reports we'll cover, you can use the PDC's reporting system called ORCA or another alternative. ORCA is an acronym for Online Reporting of Campaign Activity. If you will be using ORCA, you may want to view the ORCA videos or attend a class on that system. If you're interested in knowing more about third-party campaign management software, you'll need to research and contact vendors directly. So once you become a candidate, what reports do you need to file? If you're a statewide or countywide candidate, in most cases you'll need to file 2 reports within 2 weeks of becoming a candidate. Remember, that might be years before an actual election. Within 2 weeks, you will file the Personal Financial Affairs Statement, known as the F1, and the Candidate Registration, known as the C1. The requirement to file these forms is not in any way connected to how much money you plan to bring in or spend. It's about the candidate office. Other reports will come along later, but these 2 are filed right away. Here are the reporting requirements that apply to local offices such as City Council member, Fire Commissioner, and the like. You can see on this chart that reporting requirements are determined by the number of registered voters and the money raised by the campaign. The registered voter count looks at the whole jurisdiction based on the last general election. If you can't find your voter count, the PDC can help you. Let's talk briefly about the F1 Personal Financial Affairs Statement. Sometimes people are surprised that this report asks about personal finances, not about a campaign. In fact, almost all states require public officials to disclose personal financial information. One purpose of sharing this information is to eliminate or expose conflicts of interest. The F1 asks you to report on the 7 topics listed on your screen. The F1 is required for most state, county, local, and judicial candidates, both new and returning. First-time candidates file this within 2 weeks of candidacy for the 12 months prior. Elected officials file annually by each April 15th. The filing system will walk you through completing the F1, but if you would like more information, you may want to watch our YouTube video on filing the F1. Extensive information can also be found on the PDC website. Let's jump back to political committees. Committees must register using the C1PC within 14 days of becoming a committee, unless the election will be held within 3 weeks, in which case it must be filed within 3 business days because the election is so close. In some cases, committees will file other C reports. Which C reports you need to file will depend on your reporting method. When you register as a candidate or committee, you will be asked if you plan to do full or mini reporting. Full reporting is most common, and it does require you to report contributions and expenditures. Mini reporting is permitted only if your campaign raises or spends no more than $7,000 and if no one contributor donates more than $500. Mini reporters must keep records but don't need to file contribution and expenditure reports. If you aren't sure if you will exceed the limits of mini reporting, we strongly recommend that you choose full reporting because it is much easier to switch from full back to mini. When people choose mini reporting and then find they exceed the limits, it is often problematic. Switching from mini to full requires PDC approval and many extra steps. Check the PDC website for more information about what's included in the $7,000 and $500 limits. One thing you'll see explained there is that candidates contributing to their own campaigns are an exception to the $500 rule. Remember that good reporting begins with good record keeping. Regardless of your reporting method, always keep accurate, detailed books of account for at least 5 years and be prepared for campaign records requests. A records request can come to a committee or a candidate in the 10 days before any election they're in. Requests will come to the email address registered with the PDC, and records can be requested whether you're doing mini or full reporting. If you are doing full reporting, you will need to file the C3. The C3 is how you report monetary contributions put into the campaign bank account. Money needs to be deposited within 5 days of receiving it, and you may choose to file a C3 for each deposit you make. However, you are also permitted to use one C3 report for all deposits made on the same day. Generally, people file a C3 for each day they deposit. The PDC's ORCA video or ORCA Live training provides details on filing a C3. And remember, mini reporters don't file C3s. Those doing full reporting will also need to file the C4. The C4 summarizes financial activity, both money in and money out, including in-kind donations of time, talent, and tangible items, which we'll go into soon. Parts of the C4 show expenditures, pledges, and other items. This report will also reflect your campaign's bank balance. Now, to be clear, it isn't electronically connected to your campaign bank account, but rather it's a summary of what you've reported in Orca. One important part of the C4 is line 18. It's important to pay attention to. If line 18 is a negative number, it means your bank account is overdrawn, and you'll want to figure out whether that is true or a reporting error of some sort. You'll hear much more about this if you attend Orca training or watch our Orca video. Moving into contributions. This video covers many important points about contributions because handling contributions correctly is one of your most important reporting tasks. However, we won't cover every possible situation because there are many intricacies. We're going to use the term contributions broadly to refer not just to money, but to items and services that assist a candidate or committee. In order to accept contributions, candidates must have a separate bank account for the campaign. It's fine for a candidate to be their own treasurer. However, many candidates do find it helpful to use an experienced treasurer, especially if they have many transactions. We'll be talking about the information that needs to be reported about contributors, but you must also know the rules about anonymous contributions. They cannot exceed $500 per calendar year or 1% of your total per calendar year, whichever is greater. Please keep in mind that you don't choose to make contributions anonymous. They are donations for which nobody on the campaign knows who the donor is. You also should not solicit anonymous contributions. In fact, when you don't know a donor, you must make an effort to find them, and you should document your efforts. If you exceed your limit of anonymous contributions, you will have to pay the Washington State General Fund the amount of the overage. So this is a key point to remember. You must have a way of collecting the information you are required to report about your contributors. Don't solicit anonymous contributions. Putting out a jar labeled donations would not be acceptable. Most contributions to and from candidates and committees are monetary contributions or in-kind contributions. In-kind contributions are gifts that are not money but still support the campaign or committee with goods or services. Common examples of in-kind contributions that are reportable include things like donated office space, free or reduced cost printing or polling services, or entertainment provided by a musician for a campaign event at no charge to the campaign. As you can see on this chart, the information you must report about the contributor is tied to the value of the contributions given by someone in the aggregate, that is, the total over the course of the campaign. One common mistake campaigns make is forgetting to gather employer information from people who contribute over $250 in the aggregate. Another common error is reporting contributions as monetary when they are actually in-kind goods or services. Information about contributors who pledge $150 or more to give at a future date must also be reported. Candidates and committees occasionally receive money or services that are not classified as contributions for reporting purposes and that don't count against contributors' limits. Typical examples include things like bank interest, vendor refunds, reimbursement from another campaign for shared expenses, contributions you return within 10 days, and some volunteer services, which we'll talk more about soon. Other contributions that don't count against contribution limits include volunteer expenses of less than $200 across the campaign, some signage and other communications, and the cost of ordinary home hospitality, such as coffee hours, coffee chats, or wine and cheese parties, where the purpose is to meet the candidate or organize the campaign. Now, in order for a hospitality event to fall into this category, there can be no admission charge or contributions solicited or received from those attending. Again, these are items that don't count against contribution limits. A complete list is on the PDC website. On the PDC website, you can find a printable chart of contribution limits. Limits changed in 2023 to reflect inflation. Contribution limits on the chart are per election, meaning for each ballot you are on, the primary and the general. If a candidate makes it through the primary and goes on to the general, they may spend the surplus primary money on the general election. If a candidate gets a contribution for the general before the primary election and they're on the primary ballot, they may not spend that money for the general until after the primary. Likewise, you cannot receive money for the primary after the primary election unless you lost the primary and you have debt, in which case people can contribute toward your debt for up to 30 days. Next, when determining contribution limits, it's important to correctly track two-party check contributions. If you receive a contribution written on a two-party check, you should record the contribution as split equally between both parties on the check unless they instruct differently. For example, in the case of a $100 check drawn on the account of John and Mary Smith, attribute $50 to John and $50 to Mary. Finally, there is a general restriction that says no one contributor may make a last-minute contribution of more than $7,500 to a campaign, and that includes a candidate contributing to themselves. There are a few exceptions for certain offices and committees, and last minute refers to the 21 days before the general election. Now I'll explain loans. Candidates often contribute to their own campaigns with the expectation of getting that money back once the campaign has enough money. We call that a loan to the campaign from someone, often the candidate, and it should be reported as a loan. This type of situation needs a written loan agreement. With a written loan agreement in place, a candidate can be repaid up to $7,500 per election. Now, if the candidate does not want to be paid back, they can, of course, just make a contribution to their own campaign. Or, if a candidate knows for sure they will be paid back within 21 days, they can request a simple reimbursement from the campaign. However, once 21 days have passed, any money given by a candidate to their campaign cannot be repaid at all unless that written loan agreement was in place before reaching 21 days. Candidates, you don't want to let this catch you by surprise. Without a loan agreement in place at 21 days, the campaign cannot repay you. There are restrictions around foreign contributions. Foreign nationals cannot be involved in contributions, expenditures, or decision-making in any campaign. A foreign national is a person with foreign citizenship or a foreign business or corporation. However, individual people with green cards may contribute to elections in the U.S., and a foreign business with a U.S. subsidiary may contribute also. The law requires organizations to certify that contributions they make do not include foreign involvement. The PDC has a certification form you can use. You can use that form or create your own, but certification from organizations must be in writing. We strongly encourage candidates and committees to collect the certification at the time contributions are made and to work with online payment vendors to incorporate this into contribution processing. However, if you do receive a contribution from an organization without a certification, you have two choices. You can hold the contribution in your regular bank account until the next PDC report is due, or for 10 days, whichever is later, or you can segregate the contribution to prevent it from commingling with other contributions for up to 30 days. There are many more details on the PDC website. It explains a few exceptions to the certification requirement and outlines the process in detail, including what to gather if you use your own form and what to do with the statements once you get them. Now we'll address volunteers. It's typical for committees and candidates to utilize volunteers. Earlier I mentioned that some services performed by volunteers are not counted toward contribution limits. Let's look at the details. Here are some campaign activities that are commonly done by volunteers. While engaged in these types of services, the volunteer is giving of their time and talent, so you might assume it is an in-kind donation. However, if certain conditions are met, you don't need to report these services as actual contributions, and they don't count against contribution limits. Volunteer services don't count toward contribution limits if the volunteer isn't compensated by anyone for the work and isn't ordinarily paid for this same type of work. In terms of being compensated for the work, I'll add that if the volunteer serves while on paid leave that they've earned, they're still not considered paid for the volunteer work. So to repeat that, if these conditions are met, the volunteer work doesn't count toward contribution limits. Now there are some exceptions for attorneys and accountants. Attorneys or accountants, whether they're being paid by their employers or are on their own time, may provide their professional services to a candidate in order to assist the candidate in complying with state election or PDC laws, or to a bona fide political party or caucus political committee for any purpose. However, these professionals may not provide similar services to any other type of political committee without a contribution ensuing, in which case the committee must pay the fair market value of the services, or an in-kind contribution must be reported for the fair market value. Some of your contributions may come from fundraisers. This video highlights what we call low-cost fundraisers because they require more limited reporting and are therefore appealing to some people. Other fundraiser information can be found on the PDC website. Low-cost fundraisers are certain types of events that generate small contributions from those who participate and require more limited tracking and disclosure. There are 5 types of low-cost fundraisers. The first is retail sales at fair market value, such as selling t-shirts. If you were selling a 3-color t-shirt, you would need to research the average cost of a comparable shirt and document your research to prove it is fair market value. A lawful gambling operation would be something like a raffle, and you would need to check the Gambling Commission rules before hosting one. The third option is a food and beverage event such as a spaghetti feed, and you would need a stated admission price of $100 or less and no solicitation of contributions. This would also include just selling food items like 5 pounds of king salmon, as long as the price was no more than $100. The fourth option is an entertainment event with the same rules as the food event. Lastly, you could have an auction where all items donated to be sold were valued $150 or less per donor. Now, it's important to know that if someone pays more than $150 to participate in a low-cost fundraiser, that money should be segregated from the proceeds of the fundraiser and reported like a regular contribution. For example, if the low-cost fundraiser is an event with a cost of $30 per ticket, and someone buys more than $150 worth of tickets, that person's contribution would need to be reported under the person's name and not as part of the low-cost fundraiser proceeds. Also, sometimes people ask if they can have more than one low-cost fundraiser going at a time. For example, a $25 spaghetti feed and a $5 raffle. The answer is yes. But remember, if one of these conditions is not met, the whole event no longer qualifies as a low-cost fundraiser, and contributions must be reported with more detail. This is a good time to mention that state law restricts the use of public facilities to support or oppose candidates or ballot measures. You can't use them for fundraisers or for any aspect of the campaign unless it's the usual practice for the facility and doesn't give special consideration to your campaign. So if a public library regularly rents their room to any group, they can rent it to you. If you would like more information about this, search the PDC website for Guidelines for Local Government Agencies. Let's move on to campaign expenditures. An expenditure includes many types of spending and might even be an agreement to make a payment. When you are doing full reporting, all expenditures must be reported. This chart shows what you will need to report about common types of expenditures. If it's a purchase from a vendor, report the vendor's name and address. If it's a reimbursement, report what was purchased, where it was purchased, and who was reimbursed. All candidate campaign expenditures must be related to the campaign, and that goes for reimbursements too. For example, a candidate can't fill up their gas tank and have the election campaign reimburse them unless the car was only driven for the election campaign. A better practice would be to track the miles driven for the campaign and request the mileage reimbursement only for the campaign miles. Another common type of expenditure is payment to a consultant. In addition to reporting the consultant's work, you will need to report any subcontracting done by the main consultant. For example, if you hire a consultant for some flyers and they hire out the printing to someone else, you will want to report the printing company name, number of documents printed, and the cost, as well as the work of the consultant themselves. In general, the more details you gather, the more prepared you will be to report. And that ties into our next key point. You must keep receipts as part of the books of account. Now let's talk about debt. Since one purpose of disclosure reporting is to show how money is spent, you need to include debts the campaign is obligated to pay, but for whatever reason has not yet paid. So when you file a C4 report, it will ask you about debt. Debt includes things like reimbursements not yet made, contingent liabilities, or orders or other liabilities that are not yet paid. Debt does not include regularly occurring expenses of the same amount unless they're past due. For example, you don't need to include your rent or your cell phone bill as long as you're current on those bills. Debt is reported on the C4 only if the amount is over $1,000. If you can't gather the exact amount of debt, an estimation is acceptable. Reporting requirements depend on the time of year. Usually, you will report debt over $1,000 that has been outstanding more than 10 business days as of the C4 end date. As the election approaches, the window tightens. Within 30 days of an election, you will report debt outstanding more than 5 business days. Let's move into advertising and the importance of identifying sponsors. In most cases, political advertising must list a sponsor. The ad sponsor is the committee or person paying for the ad, and sometimes the campaign itself. If there's no cost for the advertisement, it's the person who arranged the ad. Normally, an advertisement will list the sponsor by saying paid for by or sponsored by, and there are rules about what must be included. This table gives you an idea of the requirements for identifying sponsors. You can see here that sponsor name and address are required for most forms of advertising. Any party affiliation is always required for partisan offices. This chart is only an overview intended to alert you to this issue. Please visit our website for all the details. It's important to know that some forms of advertising are exempt from the sponsor ID requirement. Changes have been made over the past few years, so please do some investigating. This is something else to know about advertising. Charging for an endorsement or media coverage is illegal. The Revised Code of Washington says, no person may solicit a candidate, political committee, political party, or other person for money in exchange for an endorsement or an article in the news media supporting or opposing a candidate, committee, or party. For example, if you, the candidate, were approached by a media person who said, if you purchase an ad in our magazine, we will endorse you, that would be a violation of this law. Endorsements must come unencumbered. As we approach the end of this video, we want to summarize 8 major violations that you will want to avoid. Some of these we've already covered, but they're worth noting again. The first major violation we just talked about. Nobody can charge for endorsement or media coverage. Number 2 we also covered in this video. You cannot use a public agency facility to assist with campaigns unless it's the regular and normal behavior of that facility. Number 3. If you are an elected official, you can't solicit contributions from an employee in your agency. You can accept contributions, but not solicit them. For example, the mayor of Olympia can't solicit contributions from City of Olympia employees. Candidates who are not yet elected can solicit contributions, but need to check their own agency's rules and follow those. The fourth major violation we also covered in this video. Campaign spending must be for the campaign. You'll remember we talked about the gas in the car example. Number 5. There are limits to anonymous contributions, and you should not be seeking anonymous contributions. Number 6, you cannot reimburse someone for a contribution they made. Remember, contributor information must be reported, and if someone gets reimbursed for their contribution, they are not really the contributor. Number 7, candidates cannot use campaign funds to assist other candidates or committees. For example, a candidate can't use campaign funds to attend a party committee dinner. This is because any profits made at the dinner are essentially contributions to other campaigns. However, in this example, a candidate would be allowed to use campaign funds to pay only the cost of the consumables, like the food and beverages consumed at the event. As another example, if 2 candidates share the cost of a booth at a fair, they must do so equally. If one pays the whole thing, they are contributing to the other person's campaign. And number 8 is about concealment and the whole purpose of disclosure law. Campaign finances in Washington are some of the most transparent in the country. The bottom line is, you must not conceal what you know if you are required by law to disclose. There are multiple ways to reach the Public Disclosure Commission, and lots of information is on our website. On the website, you'll find a calendar with important deadlines for filing different reports. You can also use the search bar on the website to find details about topics in this video, as well as many others. You're also welcome to email or call. The PDC team is ready to help you.